Hi, welcome to the SIS Mortgage Lending Library. We're here today to answer questions that many first-time home buyers may have. With me is Dan Frank and Samantha Hanson. Welcome and thanks for joining us. I know you've got a lot of questions about buying a first home, so let's get started under products and programs and see what I can answer for you.
Well, the first question that we had was, should we consult a loan officer before we find a home we like or after we've chosen one?
Well, my answer to you is, I think it's always a great idea to consult with your lender first. Two things. A, you can set your budget as to what your monthly payment for your dream home will be and make sure that you're qualified for it. And at the same time, that also will help you determine what that maximum purchase price is so that you're looking for homes in your price range.
Great. So we're also wondering, what's the difference between a fixed and an adjustable rate mortgage?
Good question. A fixed rate is exactly that. Your interest rate and payment is fixed for the life of the loan. An adjustable rate, on the other hand, means that interest rate can and will change for you. Some of those adjustable rates are fixed for 1 year, sometimes 3, 5, or 7 years. But at the end of that initial time frame, that interest rate will change. And it's usually tied to an index with a margin so that in order to establish what the new interest rate and whether your payments increase or decrease. A lot of times those adjustable rates we use when you know you're not going to stay in the home a long time, or when you know that your incomes will be increasing and changing. Excellent question.
Great. Two terms we've seen thrown around a lot are mortgage insurance and home insurance. What's the difference between these two topics, and do we need both of them?
Well, again, great question. Homeowners insurance you will always need. That's the fire protection on the home. So if something happens, your home is replaced, rebuilt. So every house will have that. The mortgage insurance, a little different story. That's a risk policy for the bank. And anytime you put less than 20% down, the bank's going to require that you get an additional policy that protects them against the possibility of any losses.
So if we find a home that isn't really ready for us to just move right in, is there any way to put home improvements into our loan?
Sometimes there is, and the key to that is it depends on how much the improvements are, how long they will take to complete on the homes, whether or not we can add it to the purchase and close right away, or whether or not it's a little more extensive and it may require that we look at a construction loan versus a purchase loan. So we absolutely can do that for you.
Great.
So that wraps up our segment on products and programs. We hope you join us for the next one.